Hi everyone, I'm Sheila from Inbound FinTech. So I'm in the minority here because I'm a digital consultancy, but it's first of a kind to come to this kind of a conference, and I'm finding it fantastic and enlightening. So wanted to talk to you today about RevOps, and how many people in the room know what RevOps is? Great, we have a couple, so that's good, that's good. So revenue operations is all about streamlining a company's processes. So we do one of three things. We make money, we make a company money, we save the money, or we improve their processes. Is it this one, David? All right, so we'll look at what it is for financial services. We only work in the financial services and fintech sector. We'll look at a three-pillar model that any of the fintechs or financial institutions in the room, we work with a lot of banks that employ this or deploy this sort of service, can put into practice, and we'll show you a real-life case study from one of our insurance clients. I'll also touch on AI because if I don't, nobody will be in the room, and also research because we do integrate research into some of our data-driven approaches. So, as I say, we work for over 150 well-known brands, household brands. Well, we think they're household brands within the fintech sector. And we simplify complexity and we unlock growth. So we work for a lot of VCs and PEs, mergers and acquisitions, startups, and so on. We're also a HubSpot tiered partner, so we try to apply most of our methodology within a HubSpot framework because we have a big HubSpot team. So RevOps is really looking at a company's processes, training, data, tech stack, KPIs, and then we use all that information to audit and assess it to put it into a framework for growth. So we don't take any chances. We unlock everything, we audit everything before we can make some assumptions on growth. So some of our clients say, for example, I'm really big in Switzerland, I want to get into the UK or to the US. Here's $100,000 and do it in 2 weeks. And we say, absolutely not. We're not going to work blind. We are going to work on the data. So this is the kind of thing we do to accelerate growth. We improve, automate or include automation. We look at reporting. We use AI where we can for efficiency and go-to-market plans. And we do a lot of data work from the get-go. Drilling down a layer into what these actually mean is we look at what the company's doing right there. So we take a foundation of what they're doing. Are they working on Excel spreadsheets? They often have the typical client, we've done a lot of research into this, and a typical fintech has 27 different apps that they are using at any one point. But actually adoption of these 27 apps are extremely low, and there is no integration or unified source of truth in the company. So when we talk to the sales team, they're working off Excel spreadsheets, even though they have the most sophisticated Salesforce instance you can ever see, or Dynamics. Marketing just care about the brand. They don't even look at reporting. It's way past them. And the DPOs or the CTOs just care about their revenue and reporting. So we go in and we rip off the Band-Aid, cause a lot of disruption, a lot of headaches, and do a lot of auditing and assessment. But we have to do it very fast because nobody sees the value in this until you get to the KPIs and planning. So we look at segmentation and then we look at adoption. You know, are they using the tools? What's wrong with the tools? Do a lot of qualitative and quantitative surveys in the companies and look at the analytics they've got in place. With regards to data, we always say to a client, trash in, trash out. So they often come to us and they say, don't look at my data. It's old. It doesn't make any sense. There's duplications. It needs a cleanse. It's a complete and utter mess. Google Analytics isn't even set up. So we reverse engineer things in order to accelerate. Then we put in place the best-in-class tech stack for them. And only when we've done the above, we can set KPIs and planning. So it all stems around data, processes, and platforms. If you get these three foundational frameworks right, you can set up any company, regardless of what they are, fintech or not fintech, for success. That's what I believe. You could take this and put it into hospitality or manufacturing, it would be the same application. I wanted to give you a use case of what's happening now to traditional marketing. So some of the fintechs or techs in the room will know about, some of our clients come to us and we're not an advertising agency, and they're saying things like, we spend 50,000 USD a month on paid media or paid social. And I say, or one of my consultants says, is it successful? And they say, we haven't got a effing clue. And we say, well, why haven't you got a clue? And they're like, because people reject the cookies, or we don't have the right reporting. So we then come to them and we use advanced analytics or alternative analytics to do server-side tracking, cookieless solutions, different attribution models, and forecasting. So there are so many brand new, modernized, digitalized ways of getting the information now, which is extremely exciting, can be complex, but people still think they have to revert to first or last touch Google Analytics to get their source of attribution. So it's a very interesting space where you can now use data to make really impactful decisions on growth. So why should they care about data unification? And this is often a big pain point, because most of our ICP that come to us seem to be, it is changing, I'm glad to say, but seem to be around marketing. So CMOs or sales directors who want lead generation. We are now getting a lot of DPOs or CTOs come to us who have a tech budget and go to a data agency or a development agency like ourselves, even though people think we're a marketing agency, to actually look at their data and make actionable insights. So one of the biggest problems in the financial services sector across all our companies we're finding, and we've really researched this over 150 of our biggest clients, is fragmented data. And because they have only the data they've got, they have to make decisions based on what they've got. And that leads to data leaks or inaccurate decisions. And these decisions are often very costly. So they'll make the mistakes and then they come to us and say, hey, can you fix it? We've got data leaks or data bridges or, inaccurate data or insights or CRM data or marketing and sales and reporting. So we look at all this fragmented data and we put in place alternative analytics or different ways of collecting more enriched data, segmentation, cleansing, etc. This leads to a much stronger revenue operational framework. From that framework, we then look at source of attribution and so on to give unified solutions. So unification does lead to attribution, which does lead to forecasting and growth. So it's really on the rise that people are now looking at a different way and an alternative way to make decisions. AI, have to include AI. People say, they come to us and say, I don't know what RevOps is, but I do have a budget for AI. So we say, well, we're using AI in practically everything we do. The general use of AI in marketing is around content assist or buyer intent or SEO or chatbot assist and so on. But we use it for GEO. We use it for data enrichment. We have our own agentic agents as well, proprietary agents. Buyer intent, of course, and a really good use case of it is form shortening. So predictive analytics, where we can use AI to really get insights real time to boost conversion rates on forms that often a client has sent a paid visitor to that form. So conversion rate optimization by the use of AI is one of our biggest selling services. Here is a real case study. A company called West came to us and they said, we're growing like weeds, we're scaling at pace, we're in 3 countries now, we want to go to a lot more countries, we have over 200 employees, everybody's working from a different framework, but we're meeting our targets, so we're not that worried. People are meeting their targets. But we can't scale like this. So they identified that this was a growing concern. So what we did for them is they've had fragmented data, a very low adoption rate on a CRM. people just were not using it. There was no enforcement of it, and disjointed data which was hampering their growth. So what we did is we convinced them that we needed to spend some time auditing and assessing. We put a data architecture program in place, a framework. We used process automation and AI to make them more efficient before we started to scale them. We used marketing and sales AI and automation as a service in RPA for their underwriting. And then we did dashboards on custom suite dashboards for different stakeholders that they could make really good decisions. And we have since scaled them, and their go-to-market plans for different countries now have become far more efficient and predictable. So that's the kind of how we can use a framework and apply it in different sectors. I wanted to quickly include some relevance to research. So we team up with a lot of our clients. One of our clients we work with is Finexa, who have an API into the FCA, and we look at regulated data and how we can use that data. And something which I think is extremely interesting, at least to me, was what all of these sectors, I've just taken a snippet of the report here, but this shows that the banking sector, which is traditionally very legacy and are trying to digitalize themselves, and tier one banks to come up to speed with the challenger banks, we've seen that in this report by the FCA, that actually individuals, the employees in the banking sector, has fallen by 14.5% over just 1 quarter due to the adoption of AI in the banking infrastructure. And this is the only report that we could find that we also commissioned. So I think there is a massive opportunity for research into the adoption of AI and automation and digitalization in certain sectors of financial services. I just thought it was very interesting, and it makes you think, what's going to happen in the future if, the shortfall on employees because the adoption of AI, and we as a digital consultancy are certainly getting it. People are expecting us to lower our retainer rates and our service rates because they are assuming that machines are going to do the work, that actually you still need a human touch at the end of everything. Yes, and that was my short presentation. I know that we're going to now take the panel and talk a bit more about it.
Thanks very much, Sheila. We have a panelist alongside Sheila, Ignas Zimaitis. Please take a seat. And I am very happy that we have actually, it's a finance conference, but we have a marketing academic who also happens to be Vice Dean for Research at Vilnius University, so very distinguished company. And I just want to hear what you think about what Sheila said. Okay, so thank you very much for the invitation here. I had a quick chat with Sheila before. I think that our previous conversation as well as this presentation is really missing a very major and important thing. It doesn't tell one thing. It really focuses on solving of course the problem of the current FinTechs that are in a really high pace, seeking for revenues and whatever. But as someone who's also teaching for the new future professionals of the marketing specialists, and also as someone with the particular experience in the industry, I feel that the RevOps actually is really tackling 2 other major issues. And one important thing is there that was missing in the presentation was that the sales and the marketing teams were always in the trenches at war, trying to really saying that one or another is more important, fighting for the budget, and etc. Sales not believing in what marketing are doing, marketing saying it's actually their fault that sales have made the sale. So now, with this approach, with this systematic approach on the whole marketing and sales processes, they are forcing them to sit around the same table and trying to say that, okay, guys, you're all actually trying to solve the same problem. So that's actually my first impression, which unfortunately comes with very serious problems that the company has to solve. But we can continue.
I want to listen. I want to listen in on your dialogue on this because it's fascinating. I also want to say that if anyone has questions, you can type them into the app and they'll appear there. There's nothing for the moment. But Sheila, what's your response?
It's so interesting because, is this working? Some years ago, there used to be, we did a lot of work on sales and marketing alignment. So where sales team didn't care about marketing, they just wanted the leads, but they weren't handed over the leads in the right format or with the right property fields. So a huge amount of work in companies with sales and marketing alignment. Now it's moved to tech. Tech now need to be on the table because marketing, with no due respect to the marketers in this room, they don't really know much about AI or care about AI. They want a website that is aesthetically pleasing, but the functionality or this conversion rate on the website or the UX and the UI and the intent, they don't see as their problem. They're now realizing it is their problem. So we take sales and marketing, but we're now tech have got a seat at that table. And it's becoming more and more and more important because these companies have a budget for example, AI. So we often, in the purchase order, we often have to put the word AI instead of RevOps because they don't have a budget for RevOps, but they have a budget for AI. So sales and marketing, yes, they are still very much siloed, but this is trying to get a company to be more unified and share the same responsibility. But decision inertia is still a big problem, and people only want to do what is their job, and it might be branding. So why should they care?
Just as any approach, as I previously kind of said, that there are some certain issues with this new thing here, with the focusing on the RevOps and the optimization. Like I would even call it this. It's like if I am allowed to oversimplify things, in my personal opinion, it is like justification of every penny that is spent. It's basically because the approach focuses on a data-driven decisions, and it really helps to have an answer and to seek to run after the sales and after the revenue, which is programmed automatically in the name of it. But I would like to challenge Sheila, saying that what about the longer run? When you focus on the sale, on the immediate sale, this is a more of a short-term thinking, actually, because you actually very nicely pointed. Companies come to you and say, we have 100,000 something, and we need the results now. We actually wanted it already, so please hurry up. Yes. From another perspective, what about branding? What about this little bit slower pace activities that build the trust or that build the brand credibility? My question would be how to foster the brand, how not to forget some other major things when you're actually seeking for the immediate revenues. I think that it's a major risk. It's possibly manageable, but how do you do that?
So that is interesting because this is a data-driven approach to decision-making. However, in this unified approach, we do also include things like ARR, frameworks on revenue for retention, for customer services, but creativity is lost, back to your point. And where does design come in? Well, we'll use AI and user journey mapping to split test volumes of different designs or different landing pages for campaigns based on data. But you're right. But if you ask 20 people in this room to choose a design for a brand, we'd have 20 decisions. So that doesn't help us because time is money and we have to use data to make those decisions. Because we've often been in a use case, I've been in a room where you have stakeholders of a company and choose your branding. They'll make a decision on something far more important quicker than they will on their emotional response to what should it be orange or should it be yellow? It's really interesting, but this kind of does leave a little bit of the aesthetics and the creativity outside the room, I agree, it does. But then, you know, I would back, which horse are you going to back? The horse that has the most predictability in winning. And that's our job, to present those opportunities and the decisions which are as data-backed as possible, because they pay us for success.
So we had the Dean of the Faculty of Economics and Business from Vilnius University coming here. Tell us about the university. As one would expect when there's a conference in the city, you want to promote the university. But let's say if one were to apply this thinking to, I mean, obviously you can say it's designed for tech companies, but everything is now becoming techier. So if you were to give advice to Vilnius University, for example, and I'll ask Ignas to see if, you know, what kinds of things are actually being done. Is there some scope for, because, you know, we come from academia, we're interested in this. So what would you say to that?
The first thing I'd do is I'd look at your KPIs, what success means to you. Is it in a published paper? Is it in online visibility? Is it in raising funding for the university? So quantify success. Once you quantify success for a company, you're on the same level, because if you don't know what success means to that individual, we might have different perceptions of success. So once you have those KPIs, then I'd reverse engineer, how are you getting that success right now? What attribution sources are bringing in those KPIs? So I'd draw it right back to data. And I was talking to some colleagues over lunch about this success. You know, what is your job? What is your makeup of your job and your time? Do you even time track? And you're paid to be here as a university, but what is the objective in terms of success? What's a successful conference to you? And how do you quantify that? So I would go back to, is success, long-term success, building the reputation of your university to 100 people in the room, or raising more capital? And then how do we do that? So again, I'll take it right back to data.
On the other hand, that's another very important thing, what you just started to say. But it would be much harder to implement that into that type of organization, just because it's not because of the problems of this approach, but because of the culture at the company, at the organizational level.
Yes.
In my personal opinion, the majority of the tech companies, they're supposed to be already data-driven and tech-oriented. So when you have a team that is ready to adopt the new approaches, adopt the new thinking, it must be easier to implement this whole approach. So that is why this approach is more applicable for the companies. I'm kind of repeating myself, for those who are already prepared for such change.
That's right. We always quantify a pain point. What is their pain? You guys in your university, you probably don't have that pain. You have the money, you have the resources, you publish a paper when it's ready. But when a company is leaking money, or they've tried and they've had a big failure in a different geo, they tried to break into the US and they lost a lot of money, that is a pain. Yeah, and they don't want failure again like that. So they look at an alternative way of mitigating the risk. So they'll come to companies like us.
But then now I'm kind of taking the role of the moderator here, because that's another very interesting thing that I wanted to ask you. It really sounds like this approach is mostly applicable in these circumstances when you're really in a big problem of such. Is it a thing that you would say you can eventually, when you build sustainable business and it's operating perfectly, is there a process to roll back to a slower pace? Marketing operations, or is do you have cases of the companies that are still running this? Are they keeping on that, or are they rolling back a little bit?
They're usually keeping on it, because when a company sees success and they see adoptions high in the workforce, and everybody's, there's 80% of the workforce are using adoptions high, and we test adoption, and we go back in 3 months, 6 months later and retrain, because people offboard and onboard, and then we train the trainer. So it's a constant, always on approach to making sure the company, we embed it in the culture. This is the way we do things here, and this is why. So efficiency, and then they're tested, and then they have to report on this efficiency and productivity using this framework. So it's not a one and done. It's a framework which they should, and once you get the data, you can keep optimizing. This worked, that didn't work. Let's get more efficient in this funnel. Let's apply CRO, conversion rate optimization, to this funnel. If we move the needle by 0.1, that's going to make X amount of hundreds of thousands of pounds more for this bank because they're volume or remittance client. So it's always about using, analyzing, applying, and testing with the subset of people, the employees in the company, and always training, because you're offboarding and you're onboarding. So it's not a one and done. So done right, and the company doesn't do it without us once the framework's in place. Absolutely.
So you talked about training. If I enlarge that more fundamentally to education, it's no secret that management schools are pretty bad at management. Right. In fact, if you like to read Harvard Business Review and enjoy all their advice on leadership, and then you go on Glassdoor and you check out what employees of Harvard Business Review or Harvard Business Publishing say about the work culture there, it's a contrast. But what do you think management schools should teach along the lines that you have been talking about?
Do you know what? It's fascinating. I've had 4 sons go to Leeds University, LSE, and even in elementary school, in primary school in the UK, the one thing that even in business schools, it fascinates me that these graduates come out with economic degrees or math degrees or business degrees, and they don't know how to use Excel. It's absolutely fascinating. The basics of Business 101 are not taught in these degrees or universities, or even at 16 to 18 level. So when these graduates come out, they have all this theory, which is 20, 30 years old, but none of it can be put in practice because it's all theory-based. Even marketing, they talk about the 7 Ps, but they don't. That's what I did in my master's degree, and I'm 55 years old. I'm talking 30 years ago.
No, it's I guess 12 because it was enough of time to come up with the more Ps. It's a matter of imagination.
Is there a lot more Ps now?
Yeah, well, more.
Oh, way more Ps now, maybe. But I think business processing, the use of Excel, I would teach a 4-year-old how to use how to program or just do a basic worksheet in Excel as an example.
Well, at least in Lithuania, I guess we teach that in a school, so that's a kind of a prerequisite to basically in any regular economics.
Oh,
the informatics class at school. So.
Well, in
but you're really right. I mean, we don't really. That's I guess an issue of not teaching the actual things.
Yes, because then they can't apply it when they get into the real world. So even management consultancies, we work with management consultancies. Some people think we are one, but we all go into them. They just can't work a basic spreadsheet. It's fascinating. I find it crazy, really, that or they expect a developer to do it for them when it's just the most basic of things.
To close, I'd like you to answer 2 questions directed to our key stakeholders, which are academics and FinTech founders, FinTech CEOs. For academics, what kind of data, what kinds of collaborations are possible with your company or your clients? And for FinTech CEOs, what's your message to them?
So that's really interesting because we're just basing it on the company's data. We do things like competitive analysis, TAM and SAM, total addressable market, service addressable market analysis, but we don't really tend to go outside that. If there were published papers where we could look at predictability or desk research on a certain topic, I think that would help validate our findings when we're looking at RevOps. And for fintechs, more and more we're working with startups or accelerators, VCs, and we're putting the framework in from the get-go. So they don't make a lot of mistakes or learnings. Should we call them learnings? I mean, I tell my kids fail is first attempt in learning, and you should fail in order to grow. It's good for you. But I think, if you set the foundational work or work out what is right, what is the framework for a CRM, a CMS, an ERP for that company, which is applicable to them, but which will help them get the foundation right so they can start doing this behavioral analytics and collecting all this information right from an MVP, I think it would help them make better decisions.
Any closing thoughts?
Yeah, I mean, from my perspective, I would say that that the topic of the RevOps will definitely become part of my curriculum because it's closing this gap. What was previously said about not teaching the students about the most relative things. So that's gonna be solved in my course, which will start in September. And so that's very important because it also, as I previously mentioned, it really tackles some major issues in marketing operations. And another thing, of course, you're saying that you only work and you only have the company level data. And if I understood correctly, you don't. I mean, I want to emphasize that there is a huge value in terms of the data quality, the data that might be of an interest for any academic to deep dive into that.
Yeah.
And it's of course too early to say that what kind of papers that could it be, but there is of course a great room for conducting the research, particularly on the data that you have.
Definitely. I mean, even on that short study with the FCA, they were, oh my God, 100% would like to do this research because there just isn't enough published papers to validate or look into the future, like banking. Is it really 14.5% of employees have lost their jobs because of AI, or is it because of digitalization in banking? So they're making assumptions based on snippets of information, which need further research, for sure.
This has been absolutely eye-opening because it's interdisciplinary for us. We're venturing into a different area. We have questions popping up. We're out of time. The wonderful thing is with the app, you can answer these questions asynchronously. And of course, you can engage with each other right now after during the coffee break. And I just want to thank both of you so much for a fascinating discussion. Thank you.
Thank you so much.